I think in general, any of these days that are mild corrections are actually net bullish in some sense. In other words, when you rip this high this quick, and then you get a little concern, you get a little red in the market, and it's not 2%, where it's wiping out a whole bunch of big gains, I think is actually a subtle sign that you probably have some more upside left. And so I'm curious to see how we finished it today. I mean, obviously it's 10:01. So, the SPY could finish down 2%. And I think that, that will show you something like, hey, we are trying to suck out a little extra uh, upside here. But so far, what we've seen over and over and over again is the market has very small corrective fears. I mean, the biggest one was the Moody downgrade, and it was erased by the end of the day. Um, so I think that's where I'm still
Mhm.
pretty optimistic, and I think there's lots of upside. I do think gold catching some upside here is an interesting thing because I actually thought gold would probably stay down until all time highs. We've got a couple decent days on gold, so that's interesting, and I'm curious to see how that plays out. And then Bitcoin just been shaking up and down. So I know we're gonna talk a little bit more about Bitcoin throughout the day today. I still think Bitcoin is probably the best asset on the planet right now, honestly.
Mhm.
And I know you're going to show that chart on the downgrade thing in a minute, which I stole from you and posted in Telegram, by the way.
Nice.
Crazy chart. And not to front run anything you're going to talk about here, but I also think Bitcoin is an amazing asset to consider on the basis of the downgrade as well. So, yeah, lots of interesting stuff to cover. I'm optimistic, as James said. Hey, James, how are you? Bill, Mike, John, good to see you guys. Carlos, hello.
Yeah, in gold today, it might just be bouncing off the small market sell-off, very small. I shouldn't even say sell-off, but just breather in the market. But I do have another chart for gold as well, actually, that I'll show you why I think agreeing with you why I think that the run is not yet over. Good morning, Susan. Hey, Stacy. Hey, Bill. Hey, Mike. James. James says, Nate, you're an eternal positive guy. Don't know if I agree, but love your consistency. That's hilarious.
uh,
Well, it's good to be positive, James, because about seven out of every, actually, I think it was about 8 out of every 9 years is positive in the market. So if you fall on the positive side, that tends to be a good thing over the long haul. Might be 7 out of 8.
well, I
Don't
mean
quote.
that's kind of my basis for almost everything I do, right? And I know a lot of my traders get they get bored of hearing me say like, hey, listen, at the end of the day, I expect the market to go up more than it goes down. And that's why I fall in these in mostly net bullish strategies. Obviously, I do some things two-way options, profit pairs, so I have some diversification on directional bullish trades. But in general, and some of you guys remember it was during an all members class, maybe like, well, it must have only been about 2 months ago because basically we called the bottom on that one. I basically had people type in the chat. I said, repeat after me. If I am bullish, I'm going to outperform in the good markets and I'm going to take it on the chin in the bad markets. I have to like just accept that now. You're going to have really ugly when the market's down 3%. You can't trade net bullish strategies that you want to leverage when Nvidia is killing it and expect to be somehow perfectly hedged when the market flushes and then also make. But on the flip side, if you want to learn some really good hedging strategies, there's lots of great ones out there, but you just can't complain when Nvidia is up 48% on the year and you're up 7%.
Right.
So that's kind of the challenge I think that you have to take on head on. And I'd much rather way outperform when the market's killing it and get kicked in the face a couple times, throughout the decade, and just know that or just believe that the market's going to be up more often than it's going to be down. So that those outperformance phases are going to be better than those underperformance. And that's really kind of the core behind almost everything I do. So yes, long way of answering. Yeah, I'm optimistic, but not really like from a hey, I fingers crossed the market's going to go up today. More just a long term, kind of foundational approach to the stock market.
Yeah. No, definitely. Well, cool. We'll go ahead and get rolling. And I've got something really cool to show you, actually. Again, this is what I wanted to show you guys yesterday, but of course, I saved my market analysis day for Tuesdays. So that's what today is. That's why we'll cover today. But I'll just spoil it real quick for you guys. Let me drag this over here if I can. So we talk about the CPC every single week, which is our put to call ratio. And something really interesting has already happened today. But basically, when we get below this 0.75 threshold, see where that line, that diagonal line is there? When we get below that level, that typically means the bulls are a bit overextended. That means that there's a lot more calls being purchased than puts to an overextended amount. And typically we see a market cool off following that. So look at this. On Thursday, Friday, we had this reading 0.68. We haven't seen that in a long time. That's a very, very overextended bullish market. But look at this. Even with today's small move back, or small drift sideways, look how fast this has snapped back. Now, this, I don't know how you guys interpret this. I interpret this as there's not a whole lot of downside here that the market's pricing in. They are pricing in a cool off, but people are still anticipating this thing to go higher. I think if we saw this, still down here and the market started falling a bit, then we might see a bigger snapback where the markets drop a little further. But because we're seeing the put buyers already step in and even out the odds a bit, I think we're going to have a nice little healthy base here. So I'll cover that in full detail here in just a second. But it was interesting because when I took the screenshot that I'm going to show you here in a second, it didn't have that snapback. That just printed this morning. So that'll be really, really interesting to see how that plays out. Hey, Cynthia. Patience. Yep. Yeah, Cynthia. I hear you there. It can be tough sometimes. But Cynthia, one thing I try to do, Cynthia says her greatest struggle is patience and letting a trade play out. That's all emotional language, which is what we all battle each and every day in our trades. We go in with the right mindset. We go in methodically. We run the numbers. We say it looks good, right? Everything looks right. This is perfect. Let's do it. Let's follow the math. Then we get in a trade and our money's on the line, and it might go against us a little bit, and we start getting concerned. We start freaking out. And then we react emotionally instead of sticking to our plan. And Cynthia, I'm totally with you there. Sometimes I have many of times sold a position too early out of fear versus sticking with my plan, and then it ends up working out, and I'm just like, oh, seriously, I did it again. But that's okay. That we all battle that as traders, and we're hopefully. My goal with this class and Nate's as well is that we can start thinking methodically, thinking with the numbers, and letting that do the talking and decision making for us. But I'm right there with you, Cynthia.
Yeah. Well, one thing I've done that helped me like kind of have a better just like emotional landscape, like have more, I guess, bandwidth for emotion. So I recommend this for everyone. I have a wife and six daughters. And so I recommend if everyone gets a wife and six daughters, it'll really help you kind of expand your emotional horizon, be more stable. So that's how I approach that challenge.
That
So
is hilarious.
just a recommendation for everyone in the chat.
That's funny. Well, on that same note, I actually because I do watch the stock market every single day, and it's hard sometimes when you have a stock you really like and you see it going against you in the day to day, and you start freaking out. You sell it. I actually gave my wife my big brokerage account, and I said, I'm going to tell you the stocks to buy. You just stick with it. Don't tell me how they're doing. We'll check back next quarter or a couple months. So that's working out so good so far. Cynthia says, I think my husband qualifies as six daughters in terms of care and feeding. That's hilarious.
That I could believe that. My wife might say the
Awesome.
same.
Well, we'll go ahead and dive right in. Here's the Telegram of the week. I actually have two for you. If you're not in Telegram, here's the link. Make sure you join. I post a lot of content in there every single day, some free trade ideas, current plays that I'm doing. This was yesterday on Oklo. I had two posts on Oklo. As you know, I've been talking about it a lot lately. I actually moved my entire retirement account into it, which is a very risky play. Don't recommend that you do it. But I do think we could see it go from the 30s to 60 if the markets do get back to all-time highs, which I highly anticipate by June. So yesterday we had a pretty cool opportunity to day trade Oklo. If you see here the Newton bars, I don't have it color coded on the candles in this image, but you can see it's the same thing, green, green, green. So if you were to buy here when it flipped green on the 5-minute, sold here, nice little profit, flips green again here, buy it, sell it at the close. Had two cool opportunities there in Oklo. The stock is down today. It it moves very extreme with the markets. So when the market's slightly down, Oklo's down today 4%. But when the markets are up 1%, Oklo's up 5, 6, 7%. So that's a fun one for you guys. But here's a bonus Telegram play for you guys. And Nate and I were actually talking about it yesterday. We're going to talk about Bitcoin today. We're going to talk about the opportunity there. Some sneaky things happen while most of us are sleeping that has me really, really bullish. But we have seen Coinbase lagging behind Bitcoin a little bit. And typically, this has happened before, but typically, let's say Bitcoin's up 2%. On a typical day, you'd see Coinbase up 4%. It's normally about double of what Bitcoin is. And that's just broadly, generally speaking. However, on the most recent run up, Coinbase has not been necessarily trailing it like that. It's lagging a bit. So I'm playing Bitcoin to the long side, but I'm also playing Coinbase for the catch up play. So kind of a double whammy, wind in our sails there if we do get this surge in Bitcoin that I'm anticipating, that I'll talk about here in a moment.
Yeah, I love that one. I mean, I think some of those catch-up plays are interesting. Coin's my favorite for sure. It has quite a bit of room, and one of the nice things about Coin is that you can trade it in lots of different ways. Like because the volatility is so good, so we did a two-way trade on it. You can do those debit spreads that are 6 or 8 weeks out and easily target 200-300% if you're going for like a bigger move in the stock. Whereas the calls are super expensive and have lots of implied volatility. So lots of good stuff on Coin, I think.
Yep, definitely. Current trades, this is just a portion of them. I know we give out a ton. It was funny, I was looking for one of them the other day and I never got filled. Turns out, and I was like, oh no, I missed it. It was a great opportunity. But current trades looking good so far across the board. But let's dive into what's going on in the market right now. So today, we're getting a little bit of a cool off on the stock market. Again, like Nate mentioned at the very beginning, as long as we're not getting these 3% down days or even 2.5% down days like we were so used to seeing in March and April, I'm definitely okay with it, right? This is a very, very normal day to day, and I'll show you exactly why. So we have a slight, 0.5% downwards move today, but that's nothing to be worried about. And hopefully the data convinces you too. As far as economic reports this week, nothing really huge this week. Some typical reports that you might see, nothing really market moving. However, next week, really important here. Next week, Thursday, before the opening bell, we have the next GDP report, which I believe, someone correct me if I'm wrong, but I believe this is the one that if we have a negative print or negative growth, that officially puts the US in a recession. Is that right, Nate?
Yeah, officially. I mean, obviously, official versus real. I guess two different things. I don't know. There's so many things that are kind of good news, bad news situations here. Whether like you think negative news could help the interest rate cycle, or even like I heard some of the guys talking about how they wanted to see the largest uh, jobless claims numbers in history because that would show that like the Doge thing was working and they were cutting, you know, that
Hmm.
many federal employees. Like so, like if we had huge unemployment or jobless claims numbers, that's actually a win, and that makes this market kind of wild to think about because everything can be, take it in and you could register it as positive or negative, depending on face value. So GDP, I think, is also similar in the sense that you probably will see some numbers that throw you off because of imports exports changing so dramatically, the government's numbers themselves going down, and then in reality, it could be healthier things happening under the surface, or it could be a warning shot across the bow, and you just have to determine which of those scenarios you think you're in. I personally would not read a whole lot into GDP until 12 months after some of this stuff has actually shaken out with tariffs and some of the larger Doge cuts that actually do show up on the GDP report and things like that. But yeah, we had a negative we had a negative print on GDP last quarter,
Yeah, I've got to find this
and
chart.
it lasted and it made the market really red for like what, one day.
Yeah. Sorry, I'm looking for a chart to show you guys. It's really cool. It goes hand in hand with this. I showed it to you guys a few weeks ago. If I find it, I'll post it in Telegram. But basically, it shows you that the market typically bottoms out 6 months before an official recession. So we will, if this does tell us we're in an official recession, that may not mean that the markets are going down from there because historically, markets have already made their bottom. That's because Wall Street's always looking 6 months ahead. So Wall Street's already priced this in. We saw that with the big crash. Obviously, the tariffs had a lot to play with that too, but this is not something that I am super concerned about unless it's a just horribly negative number, which I don't anticipate. For the charts of the week, this is going to be fun. Market downgraded, right? We had the Moody's go from a AAA rating on the bond market to an AA plus rating, which was a downgrade, and everyone freaked out and said, "Oh my goodness, that means a credit crisis is coming and the economy is going to collapse." Well, that is what it looks like at face value, but let's look at previous market downgrades. So here was the market downgrade in August 5th of 2011,
Dude, look at
right?
that 12-month number. That's insane.
I know. So market was downgraded in 2011. S&P performance here, 1 month, 3 months, 6 months, 12 months later, up 18%. So market's downgraded. Analysts got it wrong. Up 18% on that bad news. All right, that's one example. Let's look at the other example, 2023. This was just recently. It's funny, this was like right after the bottoms of the 2022 bear market. Markets were downgraded, right? Scary, scary. Stocks are going to crash, economy's going to tank, right? Well, let's look at this S&P performance 12 months later, 20% gain. Again, the analysts got it wrong. Nicholas says, to be fair, that was near the bottom of the global financial crisis. Sure, I mean, it's 2011, so it's 2 years after that, where there
It,
was a market scare here with the downgrade, and
it's
they
also
continued.
just a little bit wild. I mean, does anyone think the downgrade makes sense? It's confusing to me. I mean, I'm not a super macro guy, but it's bizarre to me that if you're pointing at the debt and saying, "Hey, the debt's out of control, we need to downgrade the U.S." Like, why 37 trillion? The first 20 trillion wasn't it? The next 3 trillion, the next 5 trillion, 35 trillion was good, but 37 trillion, uh-oh. Now, like, it just really doesn't seem to make a whole lot of sense to me. Either, the US is playing the debt game and it's fine at almost any level, or it's not. And so I don't know, just again, maybe someone has a much better macro view on why the downgrade actually makes sense at the current time. But to me, it seems like one of those things where it's a storyline that layers over top of the market that has nothing to do with the actual value of stocks and where people are going to push prices.
Yeah, and Mike has a good point. Based on the ability to service debt with the interest rates higher, it's an huge number on the interest payments, and that might be why. However, I think cyclically we'll see that balance itself out. And then here's another fun chart to go alongside that. So right, we had the market downgrade, scary crash is coming. Right, well maybe not. Right, I just showed you those two data points, and check out what I came across here. This is the NYSE margin debt expansion. And if you see here, every time it pops way up here in the overextended percentage, and I don't even know how they calculate this. I just saw this chart and thought it was interesting. When it pops way above here in the red zone, that's when you see the sell off. When it comes way down here below the green zone, markets tend to bottom. Way up here above the red zone, sell off. Way down here in the green zone, markets bottom. And then look, this was up here before the bear market, way up here in the red zone. Good indicator for a pullback. Down in the green zone, perfect buying opportunity. And now everyone's scared of a big market crash, big recession. Maybe it could happen. I'm not here to say it can't happen, but if we're looking at this indicator, which is called it every time since 1995, we're not to the overextended levels just yet. So yes, debt has been downgraded. People are scared. The economy is tightening up, right? We've seen GDP shrink, but we don't have this margin debt expansion all the way over here in the overextended territory just yet. So I'm not worried about a major market crash at this very moment. As I've told you before, I think we're going to see new all-time highs in June. So we'll play it out. For the market overview, last class, again, I told you that we broke above the 200-day moving average. Things were looking groovy. We were making some deals, right? We had some positive news with China. And I said this is a breakaway zone in the S&P. Of course, unless we get any bad news, which no one really knows when it's going to come, but we've seen such market moving news with the tariff announcements. And where are we now? Exactly as called, in that breakaway zone, running up towards 600 with a little bit of a breather today. And I'll show you why I think that's happening. But perfectly nailed it on the head. Hopefully you guys made some money on it. I know I did. So hopefully you guys are getting some value here as well. So what's next? Where do we go from here? Well, let's look at the fear and greed index that CNN puts together based on some market internals. Greed is back. Again, 1 month ago, we were in extreme fear, but now we're flipping all the way back to greed. People are getting really excited again about the markets, but we do have some warning shots here, as my good friend Roger would say, warning shots. And I showed you this just at the start of the class. This is the put to call ratio. What this does is it tells us how many call purchases there are over how many put purchases there are. Obviously, calls mean people think stock's going higher. Puts mean they think it's going lower. Now, this ratio, when it's above about 0.85, that means that the put buyers are starting to take control. The bears are starting to take control. More puts are being purchased than normal. More people are anticipating downside than normal. When we get below this level, that means the call buyers are in control or the bulls are in control. However, we do have these two overextended areas to watch. And I should flip this red. Let me do this. This will give you a good visual of how to check this out. And I'll also show you guys, someone asked how to get this, this data right here. So here, typically what I say is if we get below 7.5 on the put to call ratio, that typically means markets may be overextended. We are due for a breather. It's just overdone, which is a good thing. You know, it happens. Engine ran hot, but now we need to cool off the engine for a little bit. So again, this is why I told Nate at the beginning, I wish we ran this class yesterday because it would have been perfect timing for today. So we have this very, very extreme number now down here, which means we might get a breather. Now I'll show you again what I just showed everyone. But if you look at today's print, it's already snapped back a good amount, which is very, very bullish for us. It means that people aren't pricing in a ton of downside from here. If we saw this hang out down here for a while, I think that the natural retracement move lower would be much bigger. But because we're already seeing this bounce back, in my opinion, that's a positive sign for the markets.
Graham, is that cumulative? So that's CBOE for every put and call across every asset?
It's the S&P 500, I believe. No,
Okay.
it's CBOE options total.
Okay,
It's
so it's
total.
total across every asset. Okay.
Yep. Now let me just show you guys real quick how I get this, so you guys can get it too if you want. Let me adjust my screen size here. All right, so I use stockcharts.com. So let's just go to stockcharts.com. And I don't know if you need an account to see it. Now I'm just going to type in here $CPC stands for put to call ratio. All right, $CPC. Click that, and here you can get the basic chart of it with all of their indicators overlaying it. I just clear all these out. To me, they just clutter. Let me just clear those. And now you can have the CPC for yourself. Again, when we get these readings between 0.75 and 0.1, not a lot of direction for us, not a lot of information for us, but it's good to check in because we want to know when it pops above. Look at this, April 8th. April 8th. When did the market bottom? Does anyone know the exact day?
April 7.
April 7th. So we got these extreme readings, April 3rd, 4th, all the way through the 8th. That was the bottom. Great time to be buying. And now we have this reading down here as of Friday, Thursday, Friday. These extreme readings below the 0.75, it might be a good time to start taking profits or start lowering your position size. So that's how this works. Question here, Ron, what was the line for oversold? So I typically look, if it's above 1, I'm starting to look for a market bottom or buying or increasing my position size to the long side. 0.1 is my number. If we get way up here, like we've seen a couple times, let me really back this out. And actually, if you look at the August one, like this was that huge August dip we had. Great buying opportunity. We did it on the 6th of August. We bought the bottom. But it's a really, really great tool and indicator for that. And then to the other side, 0.75 is my key number. So 0.75, when we get below that, that typically means the engine's a little bit overheated.
One thing I want to mention about the put to call, if you're going to use that as an indicator, which I think it is a great indicator, and obviously the April 7 date, is verification of that. One thing to keep in mind is that in today's day and age in 2025, those breathing periods can be a lot shorter. So if you looked at this in 2016, 80% of those options in the put to call are probably going to be 30 days out, 45 days out, 2 months out. Now, 60% of those options are going to be, zero DTE in next week. So the market doing 1 day at 0% or 0.5% red is going to clear out billions of dollars of zero DTE options. So these kind of breathing periods can be a lot shorter. Just keep that in mind when you're looking at that put to call.
Check this out, Nate. Does anyone know what happened in December 19th of 2018?
Yeah, that was that wreck.
Markets had a 20% flash crash, bottomed out in December. Does
Yep.
anyone know what happened in March of 2020? Does anyone remember your face masks?
Anyone remember March of 2020? I'm sure some folks remember.
Bottomed out, COVID crash right there. Does anyone remember what happened in November? This one had in December, but November, December of 2022. It was the
That was
bottom of
basically.
that bear market, the exact bottom. So this is a really cool indicator to use. Just in again, don't pay attention so much to the clutter in between, but when we get the extreme readings, that's when you want to pay attention.
Yeah, I personally think the put side's the better gauge than the call side. Um, just because the calls in general are gonna be heavier, and sometimes when the market's heated and overextended, like I said, one day can suck out so much of that zero DTE. Because think about the greed side of things on the calls are where you're gonna get more of the zero DTE, the short term action that can be flushed in just a day or two,
Mhm.
versus the put side being more hedges and longer term and that kind of thing, which takes a bigger move. So I think the put side is probably even a stronger indication than the call side of
Definitely,
being
definitely.
overextended.
For me, more often the call side just means a market breather. Doesn't mean a
Yeah.
crash. Doesn't mean a big 10% pullback or even 5%. It just means a breather.
Yeah.
As far as the overall market sentiment under the hood, looking in the engine, stocks above the 50-day moving average, or in other words, stocks trending higher, probably getting close to all-time highs. We're at 70% right now, which is a really, really good, healthy number. That's a very typical number for a bull market right there. And again, I said this last week, you might feel like, oh no, it's already at 70%. Stock's already back to all-time highs. I'm really missing out. I missed the boat on this one. There's no opportunity left. Well, that's not necessarily true because if we look at stocks above their 200-day moving average, which means basically, generally speaking, a bull market or bear market for that stock, we're not even half of stocks back above their 200-day moving average. So there's still a lot of opportunity out there. You just have to know where to look. Seasonals, and I put in here again a grain of salt because we are so news driven right now with the tariff news and everything, but that is starting to take a back seat a little bit. We're not hearing it every single day, moving the markets anymore. I'm sure we will. I'm sure we're going to get some big announcements in both directions. But we are starting to see seasonal start to take back effect. Now, you've heard of the sell in May and go away seasonal effect, but last week I hopefully debunked that for you to show that if you sold in May and bought back in October, you actually missed out on about 100% returns in the S&P. So yes, the summer months are slower, they're choppier, you have to be more tactical, but there's still a lot of opportunity in here, and we're going to cover that all summer long here in the opening playbook. For the presidential seasonality, it's funny. It's been an extreme to both sides, but it's really somehow managed to still follow this pattern. I don't know how, because right about here in April, I was like, yeah, let's just throw this out the window. But now we've snapped back and we're right back here in line with the presidential typical seasonality. This chart shows us typically what happens in the first year of a new president's term. The red line is when a new party's in, and the green line is all post election years. So again, we typically see some volatility in the first couple months, probably because there's new legislation coming in, some changes coming in, and uncertainty, and then we start to stabilize from there. And again, this year was no different, other than the fact that it was just about amplified 3 times to each side. So we saw that big boom going into inauguration, and then tariffs, bam, and now we're bouncing back right here in the middle of it. Again, I don't know how we've somehow miraculously pulled that off.
I mean, it just seems like a good microcosm of the environment we're in. Things are following some, like even some of your seasonality things that you mentioned actually ended up hitting even with crazy swings as well.
Yep.
It's like things are not as off base as they might feel. They're just so extreme on both sides in terms of the actual movement. I think that's kind of a microcosm of exactly what this market is. It's a market that's you know staying on the general path for a lot of our key indicators, but just doing it at the most extreme levels we've seen.
Yeah, absolutely. I'm going to put this here again. I am calling for new all-time highs in June. So yes, I do think we're going to get cool off. I'll show you exactly what I mean by that here in like 4 slides. But keep in mind, I am anticipating market all-time highs in June. That goes for S&P stocks, NASDAQ stocks, and also Bitcoin. I think Bitcoin is going to lead the way. I think our next stop is going to be about 120, 125 once we break above the highs. I actually wouldn't be shocked if our next stop is 130.
Yeah,
And
same.
so here's my analysis for the week. I think we're going to get a slight market cool off before then. This is why I wish we had this class yesterday, because today is our first day of that cool off that we're seeing. So my upcoming prediction, let me just show you this first. Here's kind of my cool off zone. Uh, it could look more like this, just sideways chop to cool off. But I think I'm just going to show you my maximum downside prediction here is that we're just going to get a retracement back to the 200-day moving average, bounce and go from there. So this is what I'm seeing right now. Again, it could chop sideways, but here's the big question for you guys, or the big takeaway, and it's this: do I see this, and do I go buy puts? Do I go short every stock out there? The answer is no. That's not how I'm trading this. I am very bullish on the market. I think we're going to get a lot of upside here. I don't want to find myself on the wrong side of that. What I do here is I just start taking profits and I just lower my position sizing. And what I mean by that is if I might risk, you know, on a regular trade $1,000, well, here I might risk 500. Down here, I would risk closer to $2,000, $4,000 on a trade, because here's my analogy for you guys. I'm not a gambler. I've probably been to a casino 3 times in my life. But if you play roulette, which funny enough, Nate Rodney has like a cool little strategy for that. It's just a numbers game, sort of, but it is. I mean, it's gambling. So let's not talk about gambling. But basically, if you're betting red or black and you've just seen red hit 10 times in a row, you might feel a little bit better that black is overdue, right? There's a good chance. Again, it's gambling. It's not a perfect analogy, but if you've seen red 10 times in a row, there's a decent chance that black is coming up. You might increase your position sizing for black. Right now, what we're seeing is red, black, red, black, red, black based on the indicators, which means it's like a 50-50 bet if you're going to go heavy to the upside here. That's why I just like to decrease my position sizing.
Well, I
If we're
love that
looking
you
at
just used an example of something that the odds actually don't change at all, that it is still 50% every
it's
time.
it's mental.
But let me help your analogy. If you knew that roulette table, it actually is black 70% of the time and it's hit red 10 times in a row, then it actually fundamentally would change how aggressive you would be betting black. And I think that's
I,
what the stock market is.
I was going to give a blackjack example, but it just got a little too cluttered and messy. But if you've seen 4 aces get played, you know there's no more aces.
Yeah, there you
That's
go.
on one deck. If they do 5 decks, you're
Yeah,
host.
the five decks.
Um,
But yeah, I think in this situation you actually have a baked in advantage, so it does change the game quite a bit.
yes. Yeah. David says a little different than that analogy because the odds don't change. You were right, David, but let's pretend they did. Like I said, I've been to a casino like 3 times, so don't take me with you to bet it all. Um, if we're looking at the internals, RSI is getting a little overcooked. This is the bespoke indicator. They have it in the extreme or heading into extreme overbought. So again, that doesn't mean a crash is coming. Let's look here, like extreme overbought here. We just saw chop, right? We had extreme overbought here. We saw a small move back to the 50-day moving average. So we're right here heading into extreme overbought. I would not be shocked if we come back to the 200-day moving average, or if we just kind of chop sideways for a bit. So again, my prediction is that we're in a cool off zone right now. Let the engine take a breather. Let's cool it off, and then we can go higher from there. As far as what's coming up over the week, we have some earnings, but not as many big market moving names. There's really nothing in here that has my full attention, to be honest with you guys. A lot of names, but a lot of small names. I am interested to see how a company like Toll Brothers is doing. That's obviously a new home builder. If they have very, very bearish news, that could be a not so good sign for the overall economy. Housing market has completely died off. I know it's slowed down with interest rates going up. I know we've seen if you look on Zillow back in 2021, there was nothing on there because everything was sold. And if you look now, there's a million houses for sale. So I'm interested to see what Toll Brothers has to say, what they have for their future projections. Same kind of goes for TJ Maxx. Obviously, that is a discretionary stock, but it's really kind of like a staple clothing stock because when times get tough, people stop shopping at Lululemon and they start going to TJ Maxx to get the discounts. So those are just 2 names that I'm kind of looking for just to see what they have to say. I'm not trading them. I'm not betting on them, but I'm just interested to see what their executive team is predicting. What's Home Depot look like? I'm not sure. How did Home Depot do? Home
Okay.
Depot is flat on earnings, 0.4%.
Yeah, looks like a little spike there and then retrace.
Yep. So let's dive into the sector view, and then we'll dive into some trading here. Sector view, again, May, we're finishing up this 3rd month in a row of all sectors seasonally positive. But going into June, we're going to get some more chop some more downtrends, and we're just going to have to be more selective, which isn't a bad thing, but it narrows our search versus like over the last couple of weeks, you could have probably picked almost any stock and made money. Going into June, we're gonna have to be a little bit more selective. So this was what I had for you guys last class, looking seasonally and based on relative strength of what sectors I liked the best. And what happened week over week? Pretty much nothing. Just a couple of shifts in here, but almost everything went higher. If you look here, except for healthcare, everything went higher. So it's just a change in overall strength. So my top sectors, I'm staying the course: communications, technology, discretionary, financial. Again, this doesn't mean go put all your money in it right now because I do anticipate a cool off. So maybe lower your position sizing, but those are my favorite sectors right now. And I put up here in blue Bitcoin. It's been the top one for a while. Obviously, it's very volatile, moves extreme in both directions, but it's been the strongest asset in the markets for a while now. And I really do think that we are on the we're just any moment away from it really, really taking off. Let me show you why I say that. I mean, if you look at Bitcoin, why does my screen never want to? There we go. If we look at Bitcoin up here, it says it's down 1% today, right? I don't know if you can really see that, but that's what it says, down 1%. However, let's look at this gray area. This gray area is what's happening overnight when the markets are closed. Uh, Sunday night, look at this. Bitcoin went from 104 to 107 in a matter of a couple hours. That's a lot of upside potential there. And then we saw it cool off. Let's look at what happened yesterday. 105 again to 107. We're getting these probes higher. Where Bitcoin showing that it wants to go higher. It just hasn't quite made that move yet. I think if we get a third knock on this door, it's going. It might take a third or fourth knock, but I do think there is a ton of upside right now. And you can see we're batting right here against all-time highs, getting really, really close to that. If we break that number, I can't guarantee anything, but I would bet my bottom dollar that this thing is going to run to 120, 130. Of course, you don't have to trade the Bitcoin futures. You don't have to go get a Coinbase account. You can just trade IBIT. That is the ETF for Bitcoin, which would put it right about, I don't want to give you a wrong number, 66 to 70 range. If we do get a break above all-time highs here in the next coming days and weeks. I really think that this is prime for, especially if I'm right about my market analysis, that we're going to see new highs on the S&P in June. So don't miss it. It's probably my favorite overall play right now. I've got a lot of stocks I like, but as far as something I'm really, really excited for, something I really, really firmly am firmly confident in, it's Bitcoin right now. East Road, what if it's a double top? Hey, East Road, it could be. It could be a double top. What if it's not? What if you said every time that it did that, it was a double top and you missed out on every single run up in Bitcoin over the, I should go back to futures. It's still not going to show it all, but you know, what if this was a double top? Maybe it was. Then bam, exploded higher. What if this was a double top? Maybe it was. Bam, exploded higher. So, Eastward, you play how you want. I'm playing it to the upside. Let's dive into the nitty gritty. Obviously, this is my favorite one to brag on. Microsoft, we nailed it, hit it out of the park. With the Apex signal, up over 300% on the trade. Last week, we did one on Bitcoin, and this is the one I must have closed it because I don't see it in my account. But this was my screenshot from last week, up 111% on that one, and Bitcoin's even higher from there. So I have to imagine if you guys still have that, it's still up nicely. But let's go ahead. Let's go ahead and say you guys missed a trade. Anyone missed a trade on Bitcoin? Anyone want? Actually, just let me ask you this: anyone want a trade on Bitcoin to take advantage of what I just showed you? Yes, yes, yes. Me. Maybe I had one person missed it. All right. Well, I'm gonna give you one anyways. Stacy says sure. Not so
Uh,
enthusiastic, but
Graham, the one I did was May 16th. So
oh,
I did a full expiration, full value
okay.
expiration. I don't know if anyone else, I think everyone else did the May 16 too, right?
That's probably what it was then. Because I was looking for it yesterday to put it in here, and I'm like, where'd that thing go?
Yeah, I did the May 16 and it exercised like 170% or something.
Oh, nice. Well, I missed a screenshot for it, so I'll just show you guys this one, 111. Let's go ahead and pull up Bitcoin. Let me show you why I like it. Everyone have Newton weekly. See this? Bullish. Let's look at the daily. Bullish. And then let me go ahead and pull up Apex here. Do, do, do. just so you can see. Apex entry, bullish entry, right? Target price says 62.76 on the Apex indicator. That's why we traded it the last time, and that's what this whole little session here is, the Apex session. Why can't, there we go. So let's go ahead and find some options. I already have some, but I'll place some more for fun. I'm going to go a month out here. It's going to give us 4 weeks of time for Bitcoin to hit that Apex target. Hopefully this doesn't totally ruin my entry cost, but I'm going to look out here. So our target here on Apex, 62.76. So I'm going to get us an out of the money order here. I'll give you guys calls too, basic calls. But let me just show you how I personally like to trade it. I'm going to go out here, give us 4 weeks for Bitcoin to break all-time highs to get into that 115 range on the futures. I think it's going to go to 120, so I think we're safe here if we do get this break, if my analysis is right and the markets do make all-time highs. So here's what we're going to do. I'm going to buy, actually, let me pull up my notepad, otherwise I'll accidentally hit enter. Always happens to me. Ticker's IBIT. This is trading Bitcoin as the ETF. 20th of June, 2025 expiration. I'm going to buy the 62 call, and I'm going to sell at the same time the 63 call. This is a debit spread. It's out of the money. It's what I would refer to as an elite trade. Nate would call it a jump trade. But right now, this is trading for a net debit of 32 cents. Let me post this in the chat, and then let me talk you through it. Vana, so you got the Bitcoin trade already. So what this is telling us is that if Bitcoin over the next month gets above 63, so if it's up here where Newton's anticipating it, let me show you the crosshairs. All right, see my crosshairs? Right here where my crosshairs are, if it does make this move higher, if it keeps trending higher, we are going to get, some of you already have the trade, I understand. Just trying to catch everyone up to speed. We are going to get, what did I just do? A 212% return on investment based on that entry I just gave you. So if we do break above it, that's a 212% gain on a Bitcoin move of about 7%. If that's right. Yeah, no, actually like less than that. 6% gain in Bitcoin, 212% on the options. So let me go ahead and post this in here for the team to have. Again, I don't have time to go through exactly how that works because I did that last week or the week before. So go watch that replay if you missed it. But that's how that trade works. But if you want to buy the calls, you can do the June 20th. I'm just going to get you a little more time here. I'm going to post you guys the, and you guys know I don't love trading the calls outright. I've got a whole spiel on that. But if you want to, I would do the 18th July expiration and look at the 60 strike call. And that is currently at 455. Here it comes in the chat. Vana, no harm. You have the other one, no harm in taking both spreads. Up to you. Just make sure you don't accidentally offset one. If you already have the 62, it will sell it or it will buy it, your sold version. So you'll end up with a 61, 63 spread, Vana. Or you can go one strike higher. In essence, it's going to give you the same thing, but it might look weird in your account if you already have the one that we did last week. So let me go ahead and do wrong expiration. Let me go ahead and do this one here. It's at 33 cents now. I'm going to get 10 of them. And Thinkorswim's cool. It'll tell me all the math for me. I'm risking $330. If I'm right, I will profit $670. So that $330 will turn into about $1,000 if I'm right. I'll let that sit for a bit. Am I setting a good till cancel order or waiting for it to expire? I'm going to wait for it to expire. Nate, would you set a good till cancel profit target?
I do on a lot of those, like most jump trades, I'll kind of settle in the number that I want, 100% gain, and just kind of double my limit or something like that. But I've been doing more of letting them expire lately. I've been, especially stuff that I'm super bullish on that has a little bit more time, where it's June 20, so on June 10 you can look at it, and if you're at all nervous about it, you take it out for a partial profit. If you feel good about it, let it expire. So I've been doing that more, but yeah, my default would be pick a target you like, set a good till canceled, and then who cares? Bitcoin spikes 10% overnight tonight, which can't happen with Bitcoin. It'll probably hit your target, 20 days early.
Yeah. So that's how I trade Bitcoin right now. You can obviously buy it. I own IBIT in my standard brokerage account, but for the options, that's how I'm liking to play it. We've had quite a few awesome winners on it, Nate. We're actually in the perfect Bitcoin program. I didn't realize it was this good. 81% win rate over the last year and a half of live
Dude,
trades.
that's it's incredible. And I mean, especially because Bitcoin had some pretty ugly spills during that time. And I was reading your analysis, I guess that was last night too, on the some of the behind the scenes stuff that's going on that's forcing them to buy up Bitcoin,
Oh yeah.
which is pretty cool also.
Oh yeah. I'll give you guys a little teaser here. Something I've been playing with. ChatGPT is actually great, but you can see here it basically finds anytime Bitcoin squeezes. Look at this. Let me just go to the Bitcoin. You can see the prices a little better. So look back here. October went from 30,000 all the way to 67. I took the down arrows out. I should add them back in so you can see them, but just a little bit easier to see the up arrows. So it went from 30,000 to 67, more than a double on the underlying. Can you imagine what the options would do? Check this out. 71 to that $100,000 number there. So about 30, 40% there on the underlying. And we could get a break above here. If we get to the all-time highs, we're going to see another squeeze opportunity set up, which is why, guys, that's why I said if we do break all-time highs, look at this, rip. Look at this one, rip. Here again, rip. So just a little teaser for you guys there. Really excited about that. It's kind of cool looking, a lot of lines, but
Dude,
I
well,
just
it's
do the
but it's
arrows.
really cool. I mean, your analysis, like I said, is pretty impressive on how much they're having to buy and why that forces the price up higher. Now, I don't know what you think about Bitcoin and macro. I know in like in the short term, medium term, you're as bullish as I am. I think we might see Bitcoin go up to 120, 130. Maybe not be quite as explosive as it has in the past. Now that it has become a little bit more of a store of value, a little bit more stable. But I think you kind of get the best of both worlds. It still has incredible upside potential, but could be more stable, for the next couple of years from just a day-to-day trading asset. So when I say I think it's the best asset on the planet right now, I mean I really mean that. It's been green when everything's red and only gold's green, and then it stayed green and kind of like led the risk off assets when Nvidia's up 5%. Just been an incredible
Hmm.
ticker.
Keith has a good question. Would I buy Bitcoin outright? I would personally, absolutely. But that doesn't mean you have, for those of you here who don't want to get a wallet or if you're scared of it, you can just trade the options just like you would any other stock versus putting, a chunk into it. But yes, Keith, I personally would buy Bitcoin. I actually do it by the ETF just because I'm still a little bit fearful of buying a wallet on Amazon and assuming that it hasn't been owned previously. But the ETF's really a good way to play, in my opinion. BlackRock manages it, so they're not going anywhere anytime soon. Christine, I love my little Bitcoin pile. Love it. Let's keep moving here. So that's your first trade is Bitcoin. Hot sheet pick of the week. We've been doing this week over week. This is from my from my on the clock stocks program, which is my premium portfolio, where we do these trades all the time. We've hit like 5 winners in a row, I believe. I just posted a link in the chat. No pressure, but if you guys want to get my premium picks, 1 to 2 a week with the options, here's the current portfolio up nicely. I posted that link in the chat. It's only 97 bucks for a month trial. If you want to try that out, where you can get these picks all the time instead of just waiting for Tuesdays, and hopefully we get you some winners as well. Last week we had WPM as the hot sheet pick of the week. It's up 50% now today with gold moving a little bit higher, so that's working out good. If you want to jump in late, you can. It's going to be priced at about 75 cent net debit, so there's still some upside there on WPM. However, hopefully you were here last week. Hopefully you show up every Tuesday at 10 a.m. and get the trades in real time. So that's last week's pick, Wheaton Precious Metals, which still has about 12 days in the seasonality window. Here, Mike says he's crushing it right now. Love it. But for this week, let's go ahead and take a look at Netflix. Netflix is on the calendar today for May 20th. What this means is that typically from May 20th, 11-day hold time, so May 20th through May 31st, Netflix seasonally goes up 3.3%. What's really cool is it's happened every year for the last 10 years. So it's not like it's happened once or twice and it just happened to average that. No, every single year it's gone up during that period. And that's how I trade the on the clock stock picks or the hot sheet if you have those. So seasonally, Netflix is 10 for 10 over the decade, shows an average return of 3.3%. So let me go ahead and pull up Netflix here and show you a few cool things about it.
Dude, Netflix is on my like all-time list of stocks I wish I would have traded more. I basically have not traded Netflix at all, as it's been just an absolute beast since, I started trading.
Yeah. So Netflix is here. It's $1,100 for a share. Oh boy. Um, we're anticipating a 3% move higher, which would be about a $30 move higher. Put it right about 12.10. Actually, a little bit higher than 12.10, right? Yeah, a little bit higher than 12.10, 12.15. Problem is, so we got till May 31st is our expiration, right? Or that's the seasonal window. So I'm going to pick the closest Friday, May 30th. Problem is, if I want to trade the call options right now, there's the price for it. Right now, it's trading for $2,280 a contract.
Yeah, just scoop up 50 of them.
For a, let's just do a quick question here. Who wants to pay $2,000 a contract? Anyone? Wow, Mark says he remembers the days he owned Netflix at $38. Wow. Faith, nope. Stacy, not me. No, I don't either. No, no, no. So you can buy the calls. Be my guest. What I'm going to do here, guys, is just a basic wrap order on Netflix. I'm just going to use this strike and this strike. Let's see what it's priced at. This is perfect for us. So again, I'm anticipating that Netflix is going to get to about 12.15 by expiration, so you can go a little bit further out of the money. However, given my broad market analysis, I wouldn't be shocked if we get a cool off period here. So I just want to play it a little bit safer here versus if we were at a market bottom and we saw the put to call ratio in that extreme oversold level, I would go a little further out of the money. But because of where we are right now, I do like Netflix. I am bullish on the stock market, but I want to make sure that we're not, shooting ourselves in the foot by getting a little too bullish. So let me type this up for you. I'm going to buy the 30th of May expiration, 1185 call, and I'm going to sell the 1190 call. This is currently trading at a net debit of 245. So I just asked you guys, do you want to pay $2,000 per options contract on Netflix? Everyone said no. Well, I did you a big favor here. Only $245 a contract. Cut the cost by 90% off. You're going to trade Netflix 90% off. And let me go ahead and pull up a calculator and show you what that means. Price is moving. I'm going to set a limit order. But let's just say for fun, I get filled for 250, which is a perfect wrap. $5 is our max selling point. That's the difference of the strikes. I'm entering for 250. That gives us, it's a one, but 100% return on investment. So if I risk one contract, if I risk 250 bucks, I can make a profit of 250. Just a double or nothing sort of play here. I'm going to set a limit at 250. And let me go ahead and punch this off. Again, Thinkorswim's awesome. It gives you the calculations there for you. Oh, filled right away. 249. I should have gone cheaper. Let's see. I'll set one at 245 as well. And the way this works, again, don't have time for all the training, but let's say I get filled for 245. It's a lower entry cost, better profit potential, 104% profit potential here on Netflix. And I'm not betting it goes to the moon. I'm just betting seasonally it does what it normally does. And my bet is that it barely drifts higher. So let's look. 530. I can't even see where my crosshairs are, everybody. Right there. If Netflix is above that line by that date, I make 100% return on investment. Pretty
Huge
crazy.
move on Netflix we need there.
Yeah, huge move. Like nothing. It could sneeze and double my money. Scott got 247 filled. Now, what I'm going to do as well is let's say you want to play a little safer. Let's say you want to do a little bit of a income, a little bit higher odds, lower return income style of entry. What you can do is go a little bit deeper in the money where you're basically just going to say Netflix might not go higher. It's just not going to fall too much over the next couple of weeks. Let me look at these numbers here real quick. I'm doing this on the fly in real time. So here's about a 10% gain here. Again, we are bullish on Netflix. We think it's going higher, but maybe you just want to say markets are cooling off. I'm just going to bet it's not going to go lower. So this is a pretty good risk to reward in my opinion, and I'm just eyeballing it. Nate's actually got a cool tool that does this all for you, which I'm going to steal from him once he makes it public. Um, but what I'm going to give you here, so that first one I gave you is a true wrap order, which is basically Netflix barely has to move higher. I mean, barely, it's like 0.05% or whatever higher.
It's
We double
ridiculous.
our
It's
money.
nothing.
I'm going to give you a play here that as long as Netflix doesn't fall 2% over the next week, you can make about, what is that? What's 150 over 35? Rough estimate here. Make about 40% return on investment. Netflix could go down 1%, could go down 2%, and you still make 42% return on investment. It could go to the moon, still 42. So it's a little bit of an income style play. Same expiration date. I'm going to buy the 1155 call, and I'm going to sell the 1160 call. Right now, net debit 360. I'll drop this in the chat. This is for you guys. If you want it, if you want the income style play, I'll place it as well. And here you can see Thinkorswim running the numbers for me. As long as Netflix doesn't tank over the next week, I make 140 bucks on 360 risk. It's a more income style play, a little bit safer, filled right away there. RV says 613 option is cheaper. Very interesting. Are you referring to the wrap, RV? Oh, wow, way cheaper. Wow. Good find there. Again, this is why Nate's calculator is going to be so cool because it'll find all this stuff for us versus me manually going through and going what I know based on my experience. Look how many options. I didn't even show you all of them. Let's see all of them. Look at all these options on Netflix that I manually have to go through to see the pricing. And that's just one expiration. Let's see how many expirations there are. So I am picking the ones that I tend to know would work best based on my own experience. But Nate, in the next couple of weeks, I'm excited for you to show that income
Oh,
machine.
it's gonna be so sick. I mean, you and I know how much time we spend going through options change trying to find risk reward. And you just think about it over the course of, you know, hundreds and hundreds of trades, just getting, you know, 10% more bang for your buck here and 20% more here and, you know, turn a loser into a winner here because you had some more cushion. Like stack that up over the year. I think it's gonna be a total game changer.
Yeah. TLKY asked for the safer option since we started at a lower price. Why not go for the shortest duration? Gives us lesser time for price to move against us. That's a good question. Let me just take a look. You could be right again, which would be more proof that we need Nate to go ahead and get this thing going live. I know you're working with the AI developers on it, but let's look at um, this week's expiration and see what the price is. So here's the reasoning. The entry price is a lot more expensive because we have less time premium going against it. So you can do this. But your ROI is going to be smaller. So 5 divided by 415, you get about 20% return on investment instead of 42%. Does that make sense? Just because the time to expiration is shorter, it's going to give you a little bit less opportunity here, if you will.
Graham, by the way, I'm running up against my 11 o'clock meeting, so I'm gonna drop off here in a second, but
Cool.
awesome stuff.
Sweet. Well, I have to bounce off at 11 too, so that's a lot of fun here. So I gave you guys a couple picks here. Let me go ahead and pull up Newton here. And I'll let you guys pick your options for it how you wish. I haven't even looked at Newton yet today because I've been so busy. But let me go ahead and pull up the Newton bullish scanner. Why don't I? There we go. Newton long scanner. Oh, Regeneron. They bought 23andMe yesterday, I believe. Wow, LW used to be such a good stock. We traded that one a lot back in 2023. Ooh. Ooh, this one looks nice. I've never healthcare. I don't like healthcare right now. It's at the bottom of our list. Let me keep looking. Utility stock. I believe utilities are good. Let me just go ahead and double check here with our sector list. Utilities is right about here in the middle of the pack. Let's see how it looks for seasonally speaking. It's kind of a mixed bag. So we'll keep an eye on that one. LNT. As you can see, the Newton indicator just popped off green on it. Let's go ahead and take a look here. What I'm looking, oh, now this one looks nice. What I'm looking for is a beautiful bullish trend and a Newton new entry today. Gilead looks good too. I'm going to go ahead and do Philip Morris right now. Staple stock, if we do get a small breather in the market, Staples should continue higher. But let's go ahead and dive in here to Philip Morris. It's a Newton entry today, which just means that it's accelerating at a greater than average pace. Or in other words, momentum is higher than normal. As you can see here, when it flips green in the past, typically that means good things for the stock. Flips here green in the past, and I can overlay it on the chart. But right now, I'm just looking down here to show you guys green. Look at that. Look at that move. Green, green. Doesn't always work. Right, here's one that didn't always work. Right? Doesn't always work, but it works more often than not. So I like Philip Morris. I like that it's going to give us a natural hedge against a market downtrend. So I'm going to see if there's any liquidity. Oh, there's good liquidity here. Tighten this up. What I'm going to do, that might not be enough. The liquidity is so good here. Let's see what we're trading at. 140. I like it. See what this week looks like. 175. What I'm looking at here basically is I want Philip Morris to not have to move a lot for us to make our money because, again, if we're depending on the expiration, a reasonable move by Friday would be 175. Next Friday, I would love to get a 175 move. However, I want about a 1-to-1 risk to reward, which we're kind of close on it. What is that? Sorry, I'm sort of rambling here, talking to myself. 81% return on investment. That's pretty good. I'm going to go ahead and do this one on Philip Morris. It's going to give us about a week and a half of time. 30 May. I'll give you guys a basic call as well. I'm going to buy the 172.50 call. I'm going to sell the 175 call net debit. This is an entry of 138 right now, which, as I just showed you, if we're right, we get 81% return on investment. Let me show you where. So here, Philip Morris, we like it. Newton's breaking the upside. We think it could get a move higher. I'm just betting that it will be above my crosshairs right there. See where my crosshairs are? If Philip Morris is above it, which is not a big move at all, very, very small move for this stock, about 0.6% for this stock over the next week and a half, I will make 81% return on investment. I will also give you the basic calls, although I don't like trading these because they're so expensive and time decay each alive. But here we go, 20 June 25 expiration. I would look to buy the 172.50 call. So if you want the basic call. Here it comes in the chat. Did I even place it? I didn't place it. So it's at 140. Let me set one at 135, and I'm going to set one at whatever it's going to fill me, 138. So we're going to filled right away at 138. I've got a limit order sitting at 135. So that's my Newton pick of the day for you guys. I'm going to go ahead and post this in the deck for you guys. So when I post it in Telegram, you can have it. Any questions, comments, concerns, thoughts before we wrap up today's session? You guys still having fun? Or am I boring you to death and putting you to sleep? Barry, what was the better price again? Sorry, I missed that question. I didn't address it earlier, so I'm not exactly sure what you're referring to. Oh, cool. Everyone's having fun. Good. I guess if I put you to sleep, you probably wouldn't be awake to type in the chat. Keith says hard to keep up with all the trades. Keith, it's hard for me. I'm trying to give you guys as many opportunities and value that I can possibly do. Of course, I try to take all of them, and you are right, Keith. It is a lot of trades, but I want you guys to have an ample amount of trades at your fingertips so you can decide which ones you want, which ones you would pass on. But I just want to give you all sorts of opportunity. All right, well, make sure you are in Telegram. I'll post that link here again, just since I saw a lot of people said it was their first time here. Go ahead, join my Telegram. If you want to continue to get the text for the starting now links, you can just sign up here. We'll text you the link every time we go live. It's every single day at 10 a.m. Eastern. Now, one thing I want to turn you to here, we always like to talk about a strategy that's working here at the end. If you guys want to get trades spoon-fed to you, my good friend Kane Uh, Kane Shea, who's just been on an absolute tear with his trades. He had that Maverick indicator, which I just got. He sent me over the list of people, the testimonials from it. It was just a massive doc. People loving it. Uh, he's got a hot streak going right now with his gamma pockets, actually. And I use stock price action to pick my stocks a lot of the time. He uses options data to pick his stocks or his options to trade. It's very, very unique. You won't really hear about it being talked about much on the internet because most people, frankly, just don't know how to do it. I can't even manually do it myself. It's that complex what he's looking for. But as far as his trade alerts go, very simple calls and puts. He hands it out to the members. And he was just bragging to me that he's nailed 5 of the last 7. And when you look at the wins and losses total, that summed up to 209% gain over the last month or so. 209%. That's pretty stinking awesome. So I told him, I said, we'll play the strategy here. We'll let people learn how you're using options to pick stocks. And hopefully he gets a few more members and you guys get to take part in some of these awesome trades. So Deanna, if you don't mind taking the screen from here and let's roll that strategy presentation with Kane, where he can show everyone how he's using the options market to pick his next trade.
We all like to back test, and some folks know how to back test and some don't. The thing about back test is you have the hindsight to help you.
Right.
It's like going back in time.
Yep.
Now, if you go back in time and you're allowed to relive a certain environment, if you already know what to expect, you're probably going to do really, really well, whether you like it or not, because you'll just have it in the back of your mind. But what's cool about this is Kane's been able to achieve in the last 9 months an 80.5% win rate on 77 live trades with options, producing an average of 55% return per trade, including winners and losers. That's an 81% average return per winner in a 5-day average hold time. That's amazing, okay? That's what I expect from a professional trader. Like this guy who used to be the VP of PIMCO, the largest bond brokerage and fund in the world. Now, I know you're getting really excited. We're going to have a great time. We're going to break everything down for you today. But remember, we can't guarantee any future results. T-Buzz gave me this, and then I found out it doesn't always work. So you know how that the crystal ball, if the crystal ball doesn't give you 100% win rate, nothing will. But look, 77 trades with an 80% win rate plus, that's fantastic. Now, folks, there will be losers. There's no such thing as a black box miracle system that prints out money on demand. It doesn't work that way. If you could grow money on trees, we would be doing it. But what we can do is give you an edge, a real edge in the markets where you're taking trades from folks who actually know what they are doing, and you're on the same side as institutional traders. Okay, if you can't handle losing trades, if you don't understand that you'll have losing trades, if you can't assimilate it, take a step back and paper trade. Be responsible. Okay, don't blow yourself out before you even have a chance. Okay, that's probably the smartest thing I'll tell you today. Now, my name is Roger Scott. For the last 24 months, I've been privately meeting and working with one of our top trading minds of our generation, a former Wall Street legend who helped manage money for a $1.7 trillion firm. Crazy. Trading billions of dollars per day. Billions. A lot of folks don't realize how much bigger the bond market is than the stock market.
Right.
They're like, bond market? Why didn't? And then they don't realize how much bigger the currency market is than the bond market, right?
Yep.
Folks, currency market, bond market, stock market. Chances are, if you had retirement savings in the United States in the late 2000s, he's traded some of your money for you, okay? Now, I've spent countless hours meeting with him, hearing his theories, and validating his work. He's been in the VIP room several times. Taking a closer look at both his incredible strategy and the real money results so far. And what he's uncovered is frankly shocking. It's a new way to target 100% returns per trade, all by tapping into a hidden force that's driving some of the biggest and most repetitive moves in certain stocks. For example, like with Nike back in March. At the time, Nike stock was getting pummeled, and the future projections, they weren't looking amazing. But on March 25th, anyone who knew about this hidden force that hit Nike that very next day could have placed a trade before the close like my special guest did, then just walked away, and sure enough, a few days later, we say, ba-boom, options on Nike, 122% gain. That's nice. I like that. Meaning $1,000 would have more than doubled. $2,500 would have turned into $3,055 in profit. That's pretty good. I like those numbers. Now, what you're about to see today may be the single most important factor in today's stock market. There's a reason why researchers at elite institutions like Princeton's, Vanderbilt, Wall Street Journal, even the SEC, they've spent countless hours trying to crack the code to this hidden force. Yet hardly anyone knows about it, yet let alone the resources to spot it in real time. But thanks to a custom code developed by a top math mind and a computer scientist, we've been able to front run these big and repetitive moves well in advance. For example, check out what happened with Caterpillar in May. Now, if Caterpillar wasn't on your radar at the time, I honestly wouldn't blame you. Early in the year, it was a great stock going higher and higher. But in late April, going into May, everything changed.